Okay, how are you guys? Hope you can hear me clearly, or loud and clear. Just let me know if I'm coming through okay. We'll see who's on today. Alright, Peter. G'day mate, how are you? Thanks for that. Alright, we'll get into it then. If you can all hear me loud and clear, we're all right to go. G'day Ryan. Welcome guys. G'day Greg, g'day Bobby. Good to see we've got a few names, new names in here, which is good. Welcome guys. Now, for anyone that is new, you can see on the top left-hand corner is TradeSetup at that's our Twitter. G'day Paul. I'll answer your question too, Paul, by the way. I just saw it on chat. G'day, Helen. So TradeSetup, the Twitter handle, I think you call it. I've been learning these sorts of things. Is in the top left-hand corner. Top right is Facebook, but probably more importantly is the bottom right is YouTube. So we're actually going to do a well, I'm going to do a talk probably in a month or so. So I'm just wondering where that will be. But we're going to do one to our meetup group as well. So I want to get that organised and do a bit of a trading chat. Might see if we can get Dav on as well and do it to the group. I think a few of you you probably saw the ones from a while ago now. It's been a while. We've been meaning to do them, but just time gets away from you. So we'll be getting a bit more active and just talking about the markets and what sort of our trading style and sort of, I guess, a bit more hints on what we're doing. Now what I'm going to say, I think that's probably about it for that. Yeah, so the markets overnight, they continue that move down, which we all probably knew they were getting a bit overcooked again on the bounce. And we saw that obviously anything to do with a fourth interest rate rise, that's what it's coming down to at the moment in the US, is really spooking equities. And a lot of that, I think, plays in the fact that it got sold off so hard previously. Now, whether you attribute that to, what is it called, the algorithmic selling from the volatility, whoever's loaded long on low volatility and it's suddenly changed and all the algos have kicked in and started selling. Whether that initial spike down was attributed to that or just fear of the market being overcooked. But the way it bounced was, well, the way I'm viewing it anyway, the way it bounced was quite hard. Bounced right back up and it's got a bit extended, got a bit overcooked, but then anything that's come out the last few days, we've got the new Fed chair out. Was it Powell? He sort of went out and contradicted himself a few times now. So I think he went and testified and said they're probably going to stick to not a moderate rate, but they're not changing their view on, I guess, tapered interest rate rises, which is pretty much 3 they're looking at for the year. But then he comes out and testifies to Congress, or just makes a statement to Congress, and he's a lot more bullish. So a lot of traders are looking at. Then you've got a spike in yields, which is what probably triggered the sell-off as well in equities. Bit of a spike in yields, but it's not up near that 3% still. We'll take a look at that in a minute, which is your key level. So you've got a spike in yields, and I think that's just triggered after the prior day being down 300 points in the Dow, then we're down another 300 points last night, and everyone's in the back of your memory, which always happens. The sort of the beating it got before the market, down 1,000 points in a session. Now, like I said, whether that right or wrong, that's what's in the back of traders' minds. And when it has bounced, if you've gone long on the way up looking for a short scalp or take out some gains there, or whether you thought it was just going to go straight back to the highs and continue on this merry way, that's got to be in the back of your mind. So when you see it down 300 points and another down move on the back of raising interest rates, then that's probably what's caused that. That's obviously what's caused a bit of a sell-off, but I think 300 points as opposed to 100 and something, a bit of an easy sell-off, is probably attributed to 1,000-point drop the previous, what is it, a few weeks ago now. So yeah, the markets are pretty much on the edge of their seats at the moment. It'll be interesting to see how it goes, because I think it's going to be choppy in the fact that he's going to speak again tonight. Now, whether he thinks about it and they stick to a more how do you say, a more refined approach to what they say. They know that they can. Powell knows, well, he probably, now that he's new, he knows that he's going to move markets with what he says. They're all hanging on every word, and he starts leaning towards his prepared speech is going to be geared towards tapered, so 3 times, and only if inflation starts kicking up would they maybe have to be forced into doing a fourth rate rise for the year. If he says that, you might see the market start bouncing again, because everyone's sort of looking towards, are they over-factored in or they under-factored in rate rises? What's going to happen? And equities obviously getting nervous because no one wants to give up the gains that's happened. And it's been really low volatility. You can see the grind has been up pretty constant, and now where volatility spiked as well. Let's take a look at that actually. So this is the chart. This is the VIX volatility. You can see the last couple of days on that move down spiked a bit, but it's nothing, like what we had. But this spike was when the market really capitulated. So it will be interesting to see if this gets a bit more contained. It's not going to get up to these levels again, because if that spikes up to there, you can probably guess we're getting hammered again, or the Dow's getting hammered again. And it's going to drag us down. So the ASX200, we're not really gun ho here in Australia, unlike the US probably. So that's the VIX. I've only got it on the daily chart, so I can't see what's happening intraday. There's something else I was going to look at. The bonds. The bond yields now edging up towards, even though they did get up towards that 3% mark, or just below that, that's more conducive of being, that's overcooked at the moment, you'd think. So maybe a deeper correction before they start heading higher. I don't know how it's going to play out. It'd just be interesting to see if that starts edging lower and you get lower highs working down, lower lows. The market works its way back down again, say 2.7. You might find that the market's probably going to sell off, but it might start finding a bit of a base on the equities, but we'll see how that goes. Dow, let's look at the Dow. We're the daily, so I've just marked up a couple of levels, but it's more from I'll go to the 4-hour chart. We're more interested in what's happening short term. That's just sold off since I marked it up. So your key level just at this time really is this swing level at 24,608. About 300 points off that now. We could get down there during the day session, maybe retest it and then bounce. Who knows what's going to happen, to be honest. And that you can see the angle of descent there it's quite steady, it's quite sharp, just boom, straight down. And that was really, I think, later on in the session, it was going not too bad after his first testimony. His first testimony was pretty tapered, nothing new. Everyone was expecting that, but then when he came out and he's about an hour or two later, when Powell spoke to Congress, that's when everything sort of, the proverbial hit the fan. You got bond yields spiking, the market just dropped like a stone on the Dow. I think when I first turned on the computer, it was down 100. Well, that's not so bad. I refreshed about 2 minutes later, it was down 340 or 350. So it really, when it gets going, it really goes hard. So yeah, but that's, all in all, this is the swing level. This is the key level that's got to hold up. 24,621 or around 24,600, 620, sorry. What am I saying? That's your swing ankle. If that's broken, and then we bounce to build that lower high, that's when I think the bigger picture comes into play. You've got this one move down. This market's been edging high. It got overstretched right up here at 25, say a touch below 2,600. But we can just hold a high low here and keep grinding up. So we're going to have, I'll draw this up on a different chart because it's just so much easier. So what I'm watching for, we've spoken about this before. What I'm really looking for is what kind of, is there weakness going to come in? Is it going to be buying support? Because right now, right up here, we're overcooked basically. We've got our key level down here. So do we go down, retest it, then start working back up and make new highs? I'll probably enjoy this quite well. Or do we spike through and then you get this type of price action going right back, and then you get more of a major lower high below, was it 25, was it 6, say 2,600 below that, and then you'd be looking for that lower high to come in play. That's a major lower high, that's your lower high, and then you probably would expect this could be your first move down. And if you extrapolate that out, I'm going into the stochastics, but you know what I mean. It could be a fairly decent sell-off from here. Does that make sense, guys? What I'm trying to say. So it's all really dependent on, for me, how we go here. Do we hold up? You've even got another scenario you've got to just keep in mind. We could easily come in here, hold up here, chop around a bit, push up, and then start building a low high and really come back down, retest. You really just got to watch your key levels at the moment. I don't think it's the best time for me. I'm not seeing this as the best time to load the boat up here, obviously. And we have moved down quite hard the last few sessions off the highs, which you really got to expect that. You can't sit there being overcooked up here and expect to just keep moving higher. You've got to be really risk adverse at this time. So, there's nothing to say you can't. If you are trading ASX, even trading the US, you can happily jump in, know exactly where your risk is going to be. There's still stocks that will go up. You just got to have a solid. I think it comes more down to the fundamentals and whether it's trending nicely. If it's trending nicely, you've got really solid fundamentals for a company, then they're probably going to weather the storm quite well. But then again, saying that, when you've got something like the GFC, doesn't matter what company it is, they get hammered. They can really get hammered because they're pure fear. So you just don't want that fear to come into the market to really start driving stocks lower and people just trying to, running for the door. So yeah, I've got an eye on this. I think my two key levels are really just this 24,600 and up towards 2,600. Just to see how it goes. Does it retest here, or do we get another move down? And then even if we do get sold off down here, and I'm inclined to sort of feel it's going to do this, it's going to drag out a few of these late buys, I would expect, clean them out a bit, and then see if it can build a high low off this 23,200, a major high low. Okay, and then start working its way back up. If we see that, I'll be a lot more confident that this here is the actual low. Okay, I hope that's making sense, guys, but I'm just trying to nut out the different scenarios of what we'd be looking for. I thought you might like that, Paul. I just saw your comment pick up. Fundamentals. I have problems saying that word, mate. Nah, I'm never going to tell you, but I do look at them. I do read bits and pieces, but I'm just not a big reader either, so I haven't got the attention span to read too much. That's why I've been into technicals. Excuse me. So that's the Dow. What else does I want to look at? The S&P is pretty much the same. Same sort of levels. You got the swing level here. It's coming down into it at the moment. Just have to see how that goes. That's probably about it that I want to look at. We'll go over to just to see where. Oh no, actually, this is what I just want to talk about. The FTSE. I'm just got to find it again. UK. This is the FTSE index. Now, I'm not a big fan of this just at the moment. I've just had a bit of a squeeze at this. Let's look at the daily. It might be the daily. All right. I'm just seeing that this is. They might have a few other issues. So if you're trading try fundamentals, yeah. Oh, you pushed me out, pushed me over the edge. So we've had the market, which they can do quite a lot. It's pushed through the highs. You get this little pop up, and then boom. That was obviously triggered by. The FTSE was already heading south before. We had all the problems in the US, and it just triggered it to sell right down to that support zone around 7,100, just down here, the orange line. But what it's done, it's reacted off that zone, and you can see the buying pressure's been quite steady. It's pushed it up towards that overbought territory, and it's nowhere near, and when you can't retrace that much, we always look between 30 and 50, say 30 and 60% retracement, whether it's retracement of an uptrend when the market pushes up, when it pulls back. Let's just draw that up. No, don't bother. So when the market retraces and it can't retrace that much, that's either conducive to a very strong market if it can't pull back. When the market's heading high, it's had a good acceleration higher, then it pulls back only 30%, say. That's quite a strong market, and then it starts to hold those highs, and then you'd expect it's going to have another good acceleration move higher. When they move 50%, there's quite a bit of selling coming in, but that's still quite good. And obviously on the flip side, when you've got move back at 60%, it makes me think twice about going long. Okay, so that's the way I factor my 30 to 50%, the pullbacks, the way we're looking at them. So this one here, when you've got this big move down, and it's only retraced, say, 30% of that move down, got nowhere near the highs, nowhere near 50%, that's, to me, shown a bit of sign of weakness, and it's taken a fair bit of pressure just to get it up to, up a couple of 100 points, 200 points off that low. So this has the potential to accelerate down through that support zone and maybe come into a support somewhere around, this level here at 66, 6,700. maybe it can get into there. So just keep an eye on the FTSE 100 if you're trading that. Don't forget they got a few Brexit. They're still nutting out Brexit. What's happening there? Whether it's going to be a clean exit, a messy exit. Who's getting what? It's like a divorce. So just keep an eye on that one. That's what I just had a quick look at today and thought, it doesn't look that great. I mean, if it comes down here and bounces off, you get a high, low, great, or it might wash out that level and bounce straight back. Don't know what's going to happen, but for me, just there's starting to come a bit of weakness into the market, or a bit of weakness is entered into market. I mean, this is not your anchor level or anything like that. This is just purely where we've seen some buying before. Your anchor level to this move up was pretty much in here, when you've got up, pull back, another correction. So it becomes your anchor when we touch on the highs, pull back, take out the highs. So there's your anchor, and that's got taken out in one foul swoop. And we just happened to pull up short on at 7100. We just saw a bit of a reaction back up again. So now, I mean, we could easily just blow through that and pull up at this. I don't know if it's more of a significant level. Let's just draw that up. Maybe so somewhere in here. We can pull up in there. If I can get it a bit thicker than that, we can pull up there. Who knows? So it's just something to be wary of if you're what do they call it? FTSE trader. Well, let's just go and have a quick look at where the XJO is. Alright. I mean, it's still not, in all honesty, we've got this big move down, reaction back up, and this is more, I think it's more fear driven. I don't think we've got a lot to worry about, to be honest, in Australia. I mean, I'm not, again, your fundamentalist, but just looking at the bigger picture, we're not raising rates anytime soon, especially if the markets continue like this. So you wouldn't expect the macro picture hasn't changed too much for Australia anyway, I wouldn't think. Obviously, you got the movement in the US dollar is going to affect a lot of the commodities, how that's going to be viewed in Aussie dollars, all that sort of thing. Sorry, let's get rid of that. Going to have a phone call in a second, so let's take that out, mute that. All right. Oh, again, a bit of a goose, aren't I? Thank you. All right, you can go. That should be better, I'm guessing. Yep. Oh, there you're all joining in the bandwagon, huh? All right, we're all good now. Yep. So yeah, this is let's make it a bit thicker. I mean, we've still got a major level. If you go to the weeklies, your major support zone is down through that. Was it 56.50? This swing through. It took a couple of months to get that organised and get that building off that support zone and pushed up off there. What was that, back in September? August, September, it started to lift off that level. And we had that push up. We're still just, we're contracting off the highs there, but we're still holding. It's more of a 60% retracement. So what I was just saying before about 30 to 60, I wouldn't think we'd get a 60% retracement in a normal circumstances. We didn't get the market absolutely getting belted in the US, which has driven us, probably overextended our market lower. But it really has just come down to, I don't like those ones, do I? Sorry, I'm just getting myself organised. We have really just come down into a nice little zone. We've got our support down here. Probably still, you're still respecting that trend there, the weekly trend up, especially if we hold up above 58. So if you go down to the dailies, what I would be looking for is a bit more. I would expect to see a bit more choppy price action. And we are, let me just see something first. We are a bit overextended. See, the weekly has taken a bit of heat. This move down has taken a bit of heat out of the weekly market. You can see the selling pressure has been quite hard. Still was soaked up quite nicely. Whereas on the daily, we've got a bit overcooked on the upside with this little push up to 60.75 or a touch above that. But what I'm leaning towards is this to hold up as a weekly support. I probably can draw that back in again. Say something like that. Hold that up. And just see if we get a bit. So we've come down. This is your major correction here. We've come all the way back up. Say We're about there at the moment. I'm expecting maybe more of this, to start, get some more buyers come in. A bit of contraction. I want to see that market contract with lower highs, higher lows. You can see higher lows through here, lower highs through here, just to contract. And then I think what you're going to see is a bit more evidence of buying starting to step back in again, soaking up that selling pressure, and then to see if we can start extending back up again and start attacking back up towards these highs and through that, over the longer term anyway. But I want to see I think it's important to see that level hold up, even somewhere around 80, 58, 75, 59 to hold up. We're not far off there now. We could probably take that in a few days. 59.71 at the moment. But yeah, that's what I'd ideally like to see. And if we start getting this kind of price action in the red, that's when you'd probably be looking for your quality setups and seeing if they can accelerate higher as the market starts turning and going higher. But again, we just have to see what plays out in the US as well. But then again, I mean, just forget, rate rises, you only get rate rises when you get a healthy economy, essentially, in the US. So they're growing, they've got a healthy economy. It's just it's been factored in quite a bit, probably overcooked on a lot of it in the US, but not so much over here. Europe, they're not really looking at rate rises either. I think the ECB said last night they're not looking at rate rises anytime soon, or even taking off tapering just yet. Probably a lot of it's driven by what's happening over the last few weeks, and it's taken a bit of heat out of the market. So and the euro's eased off a bit as well because of a bit of a bounce in the US dollar. So yeah, there's been a lot of factors to take in mind, but either way, I think it's a time to be cautious. Now, the ones we got, to your question, Paul, WHA missed out on that by an absolute bees willy. So we had a partial at 294, Paul, on WHA. We got to 290 a few days ago, which was a bugger. I was actually thinking about taking it just at this high, so I thought I'd let it go a bit up towards that $3 level, and we fell a bit short of that, which is a shame. Just holding it above the stop, which if we get stopped out, we're going to lock in only a few cents. We only missed that by 3 cents today, so bit of a wild ride the last couple of days. We'll see if this one can hold up. This is Waddle Health, by the way. If it can hold up, we've got there's a bit of volume coming in here, a volume on the way up and the volume on the way down. So that's not, it's not such a bad thing. If we start getting it edging back up again, then we may be starting to attack those highs at 290. We just have to see how it goes. I mean, the trend is still well and truly intact. Where we got our stop, it might be a bit aggressive, but I'm not willing in this kind of market to hold a wider stop. And this comes back to what we were saying a long time ago. When when the market's not looking so good, it's okay to buy, look for a good quality setup, but just be wary of your risk, exactly where your risk is. And I like to hold tighter risk because things can turn back on you quite quickly. And you can give up gains really quick. I mean, we're looking at BUB. I was thinking about that one then. It's gone bang, straight back down again. There's even another one. I don't remember. But it was looking like a setup, and I was just waiting for a pullback. Never pulled back. I went straight up, but it's just turned around, come straight back down heavily. So when the market's doing quite well, the overall market's doing quite well, it's on a nice trending higher. They don't pull back. Stocks don't really pull back like that. They might spike up, pull back, build a base, and reset themselves and start working for new highs again. But instead, when you've got a market that's getting a bit fearful, you get these hammerings in the US, they can come down quite hard. And generally, a lot of it's done by retail investors at the start on the open of the markets. 10 o'clock or so, 10:15. So, and that's just showing more your fear. People are not willing to hold anything for too long. So, like I said, if you're going to jump in when the market's looking a bit shaky, a bit overcooked on the upside, partially. On the rest, the exit now is at 230, Paul. That's my full stop level at 230. And we got to 233, down to 233 today. We are hanging in there. Just hanging in there on WHA. And it's the same on FMG. FMG, I was going to raise my stop just below around 5, which we would have stopped out today. But I didn't because I think longer term, FMG's actually, you've got a double base off here. We have got a high-low confirmed here because once it touches through these highs, which you better see on the daily, through that high, which it did just up here, that's your confirmed high-low. But we're down there testing it now, so I'd rather hold my stop just below that, knowing that if the US dollar heads south, it's probably going to help out, obviously, iron ore prices, which is going to do good for these guys. Probably FMG, they come out, the news was more news triggered lower also, and we've got, I think it was a dividend today, so what are we now? 496, 11 cent div. That takes us to about 507. I think we got in around 520 thereabouts. So we're really not down too much on this. I'm willing to hold my risk just below this high low. I mean, if that gets taken out, something's wrong. It's not working out. This could easily, I mean, it could just as well head south from here, take out this level, and then I don't want to be in it anyway. Not tight risk, not so much on FMG, no. WHA is not too bad. 10 cents risk on that. We've got a bit more on, obviously, FMG. There you go. That's all we got. We closed out ACX. Now, anyone that was holding that, we're happy just to take that and run today because, you know, this, we got, obviously didn't know that takeover was going to happen, but it was trending higher anyway, doing quite well, and then it gapped up. They had a takeover offer by Oracle at 780. I was looking to hold it because you don't know, it could overshoot the mark at 780. It could have touched up to 8. We've already taken, we took half off just when they gapped up on that first day, I think. Can't remember the price, but somewhere around 770, 760. Let me just see. 762 on that first half. Happy to let the second, I was happy to let it run up. Everything's going to plan and the market's really not moving. Well, it's not going to move too much, I think, from around the 780 mark. I'd rather just lock it in and be done with it. I mean, a good little gain. And then just see what happens with the overall market. More sort of edging out to cash just to see what happens in the coming weeks. But that's it. That's what we've got. Nothing else that I'm really looking at. I mean, to be honest, I'm not looking seriously hard, but I'm not seeing some really quality, for what I look for anyway, for longer term, you know, these good moves high. I'm not seeing anything that's looking too nice. I was actually looking at Collins Food. We've had this a couple of times now. I was looking at that potentially from the weekly. This is a weekly, isn't it? Yeah, weekly. To see what's going on there, because there is quite a few things playing out that look okay. That's probably a longer term trend up. We've probably got this one that's just broken, so we're getting this contraction lower. You know, we can see lower highs. It's holding up though. If I just clear all that out, so you can see the longer term trends here. This is the contraction from the highs, off the highs. We've got a lower high just in here at say 625. If I draw that up correctly, around that 625 mark. We've got a level just in here, just below 5, which it looks like that's going to hold up, and potentially we're holding up slightly higher than that at lows at 512 or thereabouts. So if we can hold up here and start edging higher, I want to see the way this, I want to see it pop up and then build a higher low again. So this little pop up, build a higher low, maybe contraction off here, because that's what that's going to do. And you've got a couple of levels that it's held up off. Oh, I'm not even drawing this up very nicely, am I? But you know what I mean. You've got this level that's held up, another higher low just in here, and if we start building another one, you probably find that we might get a bit of acceleration to the highs, but again, we still could easily be capped. It could do that, do exactly this, and just pop up to here, and then roll over. Does that make sense? Pop up, that's your down move, and then boom, straight back down again. You don't know. But it's actually not looking too bad. I mean, a lot of this action happened before sell-off in the market. You've got the stochastics. This move down is being quite heavy. You can see the selling pressure being quite heavy from the stochastics. But it's starting to hold up at higher levels, which you always like to see if you're going to go bullish on something. But yeah, I don't mind that one just at the moment. I think the daily is looking, I mean, it's still got a fair bit of work to do. It's still a bit choppy. It's more the longer term outlook. And I mean, by the time this plays out, you probably find what's going on in the US and over here is played out. Yeah, like I said, not much else. So anything you want to look at, guys? I thought I might actually touch on the banks because, just because, I guess. Actually, just see, no, that's not it. It's CCA, which is, we'll see if they can reject those lows. I know you'd be happy, Greg. This is CCA. So this is that Ivy Coin stock. They've got 33% interest in Ivy Coin, which is the crypto. I know none of you, maybe a few of you are actually into your cryptos, but that one's looks and sounding very good. Like it can do some good things. So just keep an eye on that when you're looking at your crypto sites. Ivy Coin, I don't know what the code's going to be, but I would have expected this to kick up a bit, but I think it was starting to get a bit overcooked up here. It needs to just wash out a few more of these buys. It's come down to this level, just around 95. Just reacted off there, so we'll see if it can get another reaction higher. It's overcooked on the downside. So technically, it's still not looking too bad. It's in a zone that needs to start holding some higher lows out here. Maybe that's your corrective action there. We've had this move up to the highs, straight back down, popped up, made this lower high around the 115 to 20 mark. You can see that was edging low. We've come down, taken out this high low, if you can see, at 102.5, taking that out, and then we're just coming back down into this zone at around 96, 95. We just touched on that today and reacting off there. So we'll see if that's the level that can hold up. But yeah, you want to see if you're going to buy into this, you'd want to see the high lows start to hold again. I'm still bullish just purely because of what's happening with Ivy Coin. I think it's going to get that flow-on effect. Some fundamentals, but they've got about 6 months cash left at their current spend rate. Maybe they're looking at Ivy Coin to generate some cash flow. I mean, if it goes well, they're going to do all right. And that I'd expect that's going to happen well within that 6 months too. I think within the next few months, probably next month or so, it's going to get onto the exchange. I don't know if you follow, anyone follows, what do you call it? Anyone follows cryptos much? You've got Binance, or is it a couple of other exchanges? If it gets on there, hopefully the next month, within the next month, you might find it starts cooking. And if it does all right, you're going to have too much worry with cash. For all investors, true. All right, what else we got, guys? You see this MVP, and I speak about this quite a bit, but I really do like it. I mean, I do hold this myself, and that's respecting that trend quite well, I think. I can just draw that up. Just want to see what it's doing. I haven't looked at this for a couple of days. Has anyone actually been following the story here? Probably more there. With MVP. Actually not looking too bad. It's starting to hold the high lows. Bit of contraction. Probably not as, it's contracting in. We'll see if they can hold up here and start pushing up into new highs and taking out that high at, say, $8.05, I think, or thereabouts. Well, that's still looking good longer term. Is it the weekly? It's a daily. Yeah, oh, actually, no, I'll get into those banks. Let me have a quick look at the banks. I just thought it might be a bit interesting to go through them a bit. IAG will do. Pete, no worries. All right, so we got ANZ. Short up with Origin. Yeah, I actually just put out a short alert on, already forgotten. Oh, what was that? God, I'm bloody hopeless, aren't I, today? I've only had a couple of coffees. Oh, what was it? What was it? If anyone remembers. Oh, that's not right, is it? That's really weird. Oh, no. Oh, BTT. That's it. So BTT was the short we're looking at. If anyone, yeah, but great. If anyone doesn't know, I had yesterday. I've been off the Discord for a couple of days, probably keeping a bit more quiet, purely because we had the kid that's been on. He's been a bit crook, had a bit of gastro, so I was running up and down the stairs, making sure that he wasn't vomiting everywhere. But oh, it's been a tough couple of days. So yeah, that's not BTT, but BTT was a short. Actually, just get that up. Look, there may not, if you look longer term, you can see the market's headed up. It's pushed down, and then it's had another push down. It looks like it's starting to hold. So, just draw this up. just draw up and just so you can get the reasoning behind what I'm looking at. This is a shortable CFD, by the way. So this is the theory. The only one thing that gets me is this little, it's a bit overcooked on a weekly basis, so it'll be interesting to see if it does roll over from here, but we don't know. So you've had the market, you know, pull back, head up to new highs, to the highs up here. Then it broke down pretty much to the anchor level, popped up, washed out that level, and then it started holding again. Okay, we've gone right back up, major double top, and now we're potentially in the zone where we are running out of steam. So the fact is, if it's really strong, you would expect it to probably pull back, start to hold a high low, and then go again into new highs. But instead, what we've done, the market's pulled back, popped up, can't go, had to pull back again, popped up, washed out that high. So it's pretty much made a lower high with a double top. And we're at this stage now where we're looking like we're starting to roll over on the weekly. Probably it's better on the daily, but that's the reasoning behind it. We've come off a major double top up here above 13, another double top, or we call it a retest fail. So it's retesting those highs, it's failing. And I think it even washed it out by a cent or two of this highs just through here. It's come back down, and on the daily, it is a bit extended down here on this, just above this. I think it's 1020 thereabouts, 1025. On the weekly, it's sort of pushed down quite hard into that. So look, it may not work out at all, but the daily is not looking too bad. So we've had this push up here. That's your retest fail, double top with a washout there, and it started to hold lower highs again into this 1025 zone. You see the reaction up on the daily. It's reacted up quite hard, as in the buyers are really giving it a good nudge to get it to sort of overbought territory, yet it really didn't get too far at all. It's only sort of touched above 1060. Now, in respect to this move down, that's not very far at all. That's not conducive to a very strong market where you would expect it to start holding and then go straight back up. Because with that sort of power, if it's a positive market, you would have expected to at least get back up to 1160. But instead, the buyers, all they could do is drive price from, say, 10.20, about 40 to 45 cents. Not really much at all. So we're looking for this potentially to break down through the support, and then you've got all the longer term pressure, selling pressure coming through. And don't forget, I mean, if the US does sell off a bit, I think these guys might get knocked around a bit, an investment company, as a lot of the investments go sour. So we'll just have to see. I mean, if it does come off nicely and we get that selling pressure, we could be looking easy down to 9 and then maybe down to the 750 zone. Even if we fall short, $8, you know, you still might have $1 or $2 up your sleeve if it plays out nicely. Like I said, the only thing sort of concerning me is we might just be reacting off this level and build more of a major lower high. So we might push down, have another secondary move up. And if you know what I mean by secondary, I mean it's just, so this is here on the daily anyway. Pushing down, we might get it fall short of that 1020 zone, have the secondary push up, take out, higher low, create this, and then do this type of price action, just capitulate. If that happens, on the daily we'll be looking for a different entry. Okay, but right now it could easily just go boom straight down. We'll see. That's it. So banks, I just want to quickly look at, so that's ANZ. We'll go to the weekly because I think it's longer term on these guys. Again, we've had this big push up, big, you know, move down to 22 bucks. It's pushed up off that zone, and then what we've done, we've just broken the anchors around that 29 mark. We've got the anchor broken off this. We've pushed up, and we look like potentially it could be rolling over. So it really needs to hold up at 27.50, I would think. Otherwise, we could see another good leg down. But then again, I'm sort of looking at the last few. Just sort of it's worth having a bit of a touch on the banks. The last few weeks, last few months, say from here to here, that's not too weak. I mean, you've had this pop down here, and then it's grind its way back up. We've started to sell down again. We may just lift back off this level. We may wash it out and have a deeper correction down to 25, but in respect to these major lows here, I'm still, I mean, on the banks, I'm not seeing anything convincing either way on the weekly or the daily, so feel free to put your 2 bobs worth in there. That's ANZ. I'm sort of seeing NAB along the same lines on the weeklies. I mean, it's washed out these lows unlike ANZ, it's sort of pushed down through there, down to 28, spiked down through, bounced back up. This move back up is getting a bit of energy behind it, but it's not really getting too far. So you might find that some more selling come back into this market, into this price. But in respect to your longer term structure, longer term it could easily move down here and then start bouncing again, take it out. So this is a monthly, longer term monthly charts. There's your weekly. So your key longer term level, higher low is at 24. So it's got a bit of room to move, bit of wiggle room without really breaking that longer term structure. It's just this weekly, it might be contracting. Got a few issues at the moment, banking, I guess. Paul will probably know more about it. My fundamentals. We'll see if we can lift up off here. CBA. CBA is looking a bit cleaner in my eyes. Don't forget interest rate rises if down the track, longer term, are going to help. Anyone that's fully loaded into, what do you call it? Housing. Let's just see if we can draw that up. CBA is probably one of my favourites. I'm just looking at the weekly on that. So the weekly's not looking bad. You've had this little pop up. It's had, well, take that back. Contraction lower. All right, we've got down to this support zone around 70. Bounced off there, but it kept holding up. So you can see this kept holding up all the way through, lower high. So there you can see that selling pressure right down, kept holding up, and then boom, we've lifted. Well, that's probably, we'll take that back. That's all a part of one leg. That's one leg. Then you've had another move down. So this is your two moves down. We've fallen short. Whether we're going to hold up that as a higher low around the 73 mark. And the stochastics, the pressure down here has been quite good. Couldn't get too far. We're only really coming back down to that support zone, which is potentially a nice little spot for a major higher low. I just think just by eyeballing that chart, it's probably got a lot of room to move. I mean, it could bounce around in here, contract further, a lot further between, say, 73 and 81. As lower highs keep trying to pressure it, keeps holding up at this 73, even building a higher low. But I think longer term, it's looking quite good. I prefer this longer term, but I mean, I'm not seeing anything right now to be diving in. Yeah, you're probably right, yeah. Div, probably true, yeah. So CBA, Westpac, yeah, probably looking to me a bit the same as CBA. You've had this move down. A lot of wash out here, a lot of washing out of these traders that bought it through 2013, 14, 15. Up into these highs, clean them back out, held a support around 28, started lifting off that support. I think that was that banking issue, wasn't it, when they were getting, ASIC were going through them, or whatever, the government are looking into investigation into the banks. That sell-off there, and it started lifting, starting to hold. 30, I think, is the key level. If it pushes through 30, I mean, it's got quite a bit of resistance, support levels further down to 28. Even anywhere in between, so it could easily spike through there and bounce back up. But it's just this move up here, and then this sell-off, and then it's been corrected. It's starting to show longer term, it's probably more rangy, like Paul mentioned, than anything else. April, that's the one, that's the date, so we're going to keep that in mind. Yeah, I mean, there's probably nothing going to happen until then. But we'll see. I mean, I just don't mind them longer term. I think the weekly is probably more I'll be going off that one, on the weekly charts. And just looking down to really the dailies for, high-low price action. But at the moment, this market's moving south, holding lower highs, coming down to this major level on around that 30 mark, just below. We'll see. Now, pulls it down, yeah, that's true. What else? What was I going to look at now? All right, let's go. We've had a couple IAG and what was the other one? ORG. IAG, let's take a look at that. IAG, I mean, if you're looking at this now for the first time, wouldn't buy it, but I wouldn't short it yet either. And probably one reason, I mean, for me, if you're shorting it, you're just picking for me, you're just picking a spot out of the sky. Let's just see what the weekly is looking like. I mean, even the weekly. I think I put out an alert recently on this one. I can't quite remember. So it's into new highs. We've had a good, you can see pretty much through here. I mean, it's been a longer time. Pushed up, all the way back down again. Pushed up, reacted off these highs through 650, reacted off, cleaned out a lot of these late buys, which it does quite a bit, and started holding high lows again, looking really nice. That's the longer term, holding these lower high lows back up again. QBE the dog. I know Paul will be loving this one. It's doing really nice. Now that's, to me, you got to question whether it's starting to look a bit overcooked up here, a bit overstretched, which that's probably not the only reason why you don't buy it, but you've got to buy it off at an initial setup. So I would like it to correct. If I'm looking to buy this, you've got your line in the sand around $7, so it's $1.10 away, $1.15 away at the moment. So I would expect this has to correct quite a bit for me, and then I want to get some sort of action on those to clean out a few traders. You know, a lower high come in and then a lower low and then start to lift off there. It's going to take a lot of time for that to play out. So if you do get, for instance, if you're looking at this and if you're wanting to short it, I'm not saying short it. I like something a bit better. I'm not a big fan of shorting just off new highs. I'd rather see something that's coming off the highs, tried to go and retest it like we're talking about BTT, and then holding a resistance zone. So it's come down, it's tried to go up into it, and it's starting to fail again. That's what I want to see for a short, because then you know that anyone that's, say they've brought it up into the market, up into the highs, if they brought it up into highs, this moved down, a lot of people hold it. It's just natural. They don't get out. They've got no risk tolerance, or they've got no risk levels where they want to get out, where they should get out, and they'll hold it. So you'll get this probably wave of sellers, you know, that will get out probably when it breaks a high low, breaks through there, they just get out. Okay, reassess it, like I think you should, to be honest. So when you get this second move up and it starts holding a lower level, potential a lower high, longer term lower high, then you're going to get this second wave of selling of people that probably, you know, that bought it potentially in here or even here, that looking at it going, well, this is, you know, it's broken down here, it's popped back up. I've either come back to neutral on the trade, or I'm up slightly or down slightly. I'm still willing to hold it, give it a bit of a chance. That when you start seeing this structure, that's where I expect to see that secondary move down, accelerated move down. It could be hard and fast, especially on the short side. Hard and fast move down. But ideally, that's what I'd like to see. I'm not a big fan of just shorting, bang, off highs there. And if I do, I want to see a lower high play out. You know what I mean? So that's what I want to short off, but it's not a solid short for me. I hope that's making sense, because this could all be a corrective action. It's not like it's a major short. So if this is off the weekly like we're looking at on BTT, you can go down the daily chart to really refine your entries, and you're not risking a lot. And on the daily chart, you've got quite a bit of move in it. But when you're looking at the daily chart for a short, there might not be that much fat in the actual trade. I mean, look, it could be worth a short, but for me, that's not the way I like to trade. It could be just a reversion to the mean. You know, the average of. Ooh, let me try to draw them. Yeah, averages could be going like that. Yeah, moving averages, a bit of reversion to the mean, and then it goes back up again. Does that make sense? So we could be moving back to the moving averages with a lower high. You go and short it. It doesn't go too far, and it reverses on you. So that's what I don't like, shorting into markets that are into new high territory. I hope that makes sense anyway. So I'd rather short major structure where you get a more of a major problem, major correction. You know, like we say, a macro correction on the weekly, say. We're getting into, I think that's where we're looking at in BTT, more of a macro correction where there's just a lot more fat in it. But yeah, if you're long, really tighten up that risk, because if you've got a longer term, great. But even if you've got if you've got a longer term view on this, that's good. But it's still worth maybe keeping a core position and using some that you can trade, because you can always ease out, lock in some gains, and then get back in if you are right. If you do get this type of price action, say it comes down, probably more this, it comes down, and then you can get that maybe more like this, comes down, and then you start getting a higher low hold, and then you can get back in, and you've made essentially, you know, gains like that. You've made some sort of gain on that, and you've re-entered the position. It's sort of just trying to lock in some, and by keeping the core position as well. I mean, it's all dependent. Depends on how you trade, your trading style. So, what was the other one? IAG and Origin. Now this, for me, this price action, I mean, just looking at this, the longer term trend's up. So you've got this push up, you've got more of a macro correction when it takes out the anchors. I'll draw it up because I think it's worthwhile, just so we're seeing the same thing. So that's a leg up. Minor anchor just in here. So when you break that minor anchor like we did just on this red candle here, that becomes more of a macro correction. So you've got that macro correction held up through here. And then we started building again. We got a bit shaky here, built that high low, and then we've got this leg up all the way up. And again, you've got your minor anchors probably about here, maybe further up, that are broken on this move down. Tried to push back up. You got a major lower high in here, and the market's accelerated. And you can see when you're right, because see it gaps down and it starts accelerating lower. It did react quite heavy, and that's pretty much what the ASX has done, which you would expect. Who knows whether this is part of a move down and then it's starting to consolidate here. Do you know what I mean? It's starting to, if you were looking to buy this, I'd want to see it hold up. Maybe it pulls back 50% of this move up, pulls back 50%, and then it starts to hold up. It could be a bit deeper. I don't really mind. But then I want to see more of that high lows forming. You know, it's really starting to drag in buyers because we've had 1-2 moves down. That's cleaned out a lot of these traders in that, in that final push up to highs. Cleaned them out. You've had this push down. It's popped back up. So this is quite a good move. So if this was really weak, this stock, you wouldn't expect that kind of move. That, you know, so the savage move down and bounce straight back up again. New issue. All right, I better get on with it, but hey. And you talking about Origin for a short there, Anne? Was that what we're talking about? IAG. But yeah, who knows what this is going to do? But it's just this. It's still holding. It's well and true holding. If you go down to the weekly, that longer term trend up. All right, and that's been considering. If you just look at, maybe we can bring it back a touch. The way it moves up too. I mean, actually, I'm going to take it one step back because that. Yeah, and look at this. I'm just looking at the monthly. I know a lot of people don't like that, looking at the monthlies, but you can see it's pressed up here and it's spent a lot of time, like quite a few years sending low. It's had this big push down through 2014, 15. And that's cleaned out a lot of this buying here and it's starting to work its way back off there. So you could probably say that this move up is sort of starting afresh. But you can see previously the moves up, it's been quite controlled. And it's been some good selling on the way down, and now this has been quite controlled again. So there's no reason why. Yeah. Oh, look, it probably could do too, Helen, yeah. So if that's the case, I mean, if it can pull back, maybe it might pull back down to here then, and just find a higher low here on the longer term, around 3, and then start heading up. It'd be interesting to see how it goes. So that's the weekly, isn't it? So we could roll over. We could take out that. Was it 8? What did I say? $3. It's $8, isn't it? $8. Miles off there. So yeah, $8. So $8 is sort of, it could extend these lows. It could retest 8.30 because it may take time. The actual support line catches up to it rather than it pushes down to 8. It could be at that stage, it could work its way down nicely, retest the lows, it could build a higher low. Who knows what's going to happen with it. But yeah, just that, looking at that price action, potentially that's what it's saying to me anyway. We'll see how it goes, but it's just that weekly trend has been quite controlled. That weekly trend up, it pulls back here, that action there, you're going back to the day of this action here, which is on the weekly, for me is not conducive of a really weak stock, because that's what you get when it's weak. That's what you get when it's weak. That sort of bang, straight down. You get this type of action on the way down. It's not really weak. It's just building. It's cleaning out a few of the late buys. And then you start to get, you know, come out the other side and start building again. So whether it's going to push down here and then do this type of price action to build a high low on the longer term and start grinding up through those highs, who knows? We'll see. $8 target. So have you got this on the short side, Ryan? Anything else you want to quickly look at, guys? Probably call it a day in a second anyway. Now let's just go and see what everything else is doing. WHA, get back up. And FMG, crack 5. CCA, that's looking a bit nicer. Oh, I wonder if they chase this back up again. I've got some rubbish little stocks, but this one, CE1, it's only trading very small, so that price action is looking quite good. Liking that. I want to see that accelerate to the 10 mark. This is one, Kalima Energy Limited, CE1. I more got involved in this one on this little push up, was doing good, and then boom, straight back down again. So I bought it on the rise, I think, at 6 on this green candle here, and it was looking great. Thinking I'm a legend for a little bit there. Think I was a legend then. It's come straight back down again, tested on 5, but it's starting to lift again. I want to see this for that 10-cent play. That's why I'm liking CE1 more. Push through 10, and then especially off this base, I think it's been supported a bit. If they can push it back up through 10, they do their little thing around the 10-cent mark. I'll be happy to get out of that one, make 30-40% on it. We'll just see how it goes. I mean, it's up a bit at the moment for me. I just want to see it lift off that, but that's got potential. Can't think of any other little ones we've got. Well, I've got anyway. I've got some rubbish, to be honest. Ones that were moving. You take your eye off the ball a bit, and they come straight back to break even. Wrap. That's had that push up. It's pulling back now. We'll just have to see if it can hold up and start building now. If people can step in, support it at higher prices, maybe through 11, 10.5, 11. See if that can play out that way, and we get more of a move back up. I'm not saying it's going to close the gap there, but start edging its way back up, maybe overshooting these MAs back to 20. I want to look to around that 20 mark if I can, or 15 to 20, just to see what it goes in the next few days. Just give it a bit of. I just want to give it a bit of a chance to push up. You can see the stochastics have still been bought up. Spent a lot of time, I mean, through here all this time, probably half a year, just cleaning out traders. Once a gap down here, cleaning a lot of them out, holding. Longer term, holding some high lows, so we'll see if they can just pop back up again. They're still doing a few good things. So, anything else, guys? Might actually just call it a day there. Just want to see what. So I was just looking at this one. There's a bit of pressure coming. That's the marijuana stock, AC8. Can I think is doing a bit of the same. Potentially rolling over, just see if this can hold up, start lifting. But I think was it Helen, you were saying they're burning through cash a bit. It's got me thinking twice. So another short, actually, might as well, I just want to quickly go over this one then. This is Newcrest. That doesn't look like much, but the weekly, we called this short a while ago, and I mean, actually didn't call it as an alert, but that's looking quite weak. I'm not a big fan of this. At the moment, I think I'm biased to the short side on Newcrest. It's just to see. I mean, when things don't go short that hard. You've got to be careful. I think being on the short side, you've got to be. It's more of a sudden move down. You might have to just take your profits as it spikes down, or take some off the table. Unlike going long, when you go long, when going short, they can only go to 0, but going long, it's sort of infinity. So they can keep grinding their way higher for as long as you want. But when you're on the sell side, they tend to be short-lived, so you have to be a bit careful. But this one, I think longer term, it's not looking the best. You've got this move up here, it's pushed down, washed out, lower high in here, tried to hold up, but the whole time it's holding lower highs. And now, if I draw that up, new crest, it's could still have a bit of it's that I've been looking at here. So it looks like the sellers are winning out there. It's been contracting, it couldn't hold up. Sellers moved it down, popped back up in the daily, and then you've got your selling come into it. Whether we fall short, 1950, whether we move down here, we'll have to see. I mean, it could get extended soon, so it looks like maybe on the daily we're getting a bit of buying stepping in. In here, it's a bit of a grind. We may be just getting down to 21. So, look, we'll just have to see. No worries. All right, guys. I might just call it a day there, guys. Thank you very much for joining me. What do we got? Thursday today. So, yeah, have a good weekend. We'll be back in on Monday at 12:30. It's actually, what I didn't realise is that we've had a good run with the modem. Happy about that. We had a good run with the modem. That's nice. I think I was telling Anne. I think when I was telling Greg actually on Monday we had a few little issues, and I found out my uploads were horrible. My downloads weren't so good either. Download speed and my upload speed was horrible though, compared to normal. And I realised that my bill was due on Friday, the day before. So I think they just wind you back on your download speeds, and it just make your computer. It looks like my computer's running like crap. Internet was running like crap. It's just because I didn't pay the bill. As soon as I paid it, bang, goes from less than 1 gig download to 6 or 7. So it's back to normal again. So it's good how they can do that. So they can cap what you get as well. So it's all interesting. The US gets a hell of a lot better. A lot of places get better internet than we do. Even on the 4G network, they can give me a lot better speeds than what I'm getting, say 6 or 7 download. But it's working. It's doing the job. Did the job today. All right, guys. Thank you very much. Yeah, enjoy your weekend, and we'll speak to you again on Monday. Cheers. Bye.